I'm Bryce Doeschot with the Weekly Market Roundup, brought to you by the Nebraska Soybean Board. What a week it has been. My goodness, a lot of news impacting both the grain and livestock markets, and we're going to break it all down as part of this week's Weekly Market Roundup. Kyle Bumsted with Allendale, as well as Darin Newsom with Barchart, both standing by to give us their thoughts on this week's activity. We'll get to both of them coming up here in a second, but first, a word from our supporter, the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back to the Weekly Market Roundup. Up first this week, we're going to get some thoughts on all of the tariff news. In particular, on Wednesday, President Donald Trump changed the equation a bit this week by announcing that he was putting a 90-day pause on tariffs for everyone except for China. Immediately following that announcement, I had the chance to visit with Darin Newsom. So we're going to go back to that conversation. I asked him, Darin, a longtime veteran, giving his thoughts on the markets about that news and whether he would think, in all his years of doing his job, a single tweet would have the markets respond the way it did. Here was his answer to that question.
No, but this is the world. This is the world that we live in now, and this is what we've seen. We saw it the first time from 2016 to 20, and we're certainly seeing it this time already, where these are thought out, these are timed. There is a goal for posting when and what comes out. And, it isn't much of a stretch of the imagination to say there was a time when this sort of thing was illegal. But these days, legality is just a word. And so would I have ever expected this in my career as an analyst / commentator? No, but it's where we are now.
Where we are now, and my next question to him was, okay, well, we've got all this volatility in the marketplace right now. How does that leave the farmer out there who has grain they either want to market or lock in for 2025?
The best kind of advice that I can give is to understand the fundamentals of the market have not changed. And so if the markets were bearish fundamentally heading into this, and I'm not talking about USDA fundamentals, I'm talking about real market fundamentals. If they were bearish heading into all this nonsense, they're bearish coming out. So if you get a rally like this and you've got some to sell, it's usually a good time to do it.
Let's dive a little bit deeper into those fundamentals. I asked Darin about corn, soybeans, and wheat. How do these look fundamental? Are we bullish or bearish?
If I look at our real fundamental rates of cash indexes, national average cash prices, future spreads, and basis, they're all telling me about the same story for the most part. They're telling me that things are still relatively bearish. There's still plenty of supply to meet demand. Now, as we move towards planting season, particularly for corn, soybeans, and spring wheat, this could certainly change because, I remember the day when weather used to matter, and weather patterns still are showing some storms lining up to go across the plains in the Midwest. So, but for right now, as of this moment here, today, this afternoon, heading into the weekend, things are still fundamentally neutral at best to mostly bearish across the board in the grains complex.
Darin Newsom, he's a senior analyst with Barchart, joining me as he gave his reaction to that news that changed a lot of things on Wednesday. Again, the major headline this week, the president issuing a 90-day pause on tariff talk. Let's bring in another analyst. That is Kyle Bumsted. He works with the folks at Allendale. Kyle, good to have you on this week's report. You got to see 3 of those clips from Darin. Did you see anything you really agreed with or disagreed with?
First off, thanks for having me back. I would have to agree with the actual fundamental picture. I know the USDA dropped the bomb and said we got the lowest corn stocks to use ratio in, I don't know, several years, something like that. But the basis really isn't reflecting that nationally, and the spreads really aren't reflecting that either. Now, a lot of folks are going to say, but the spreads really had some gain this week. But we've also got to take a look at, too, we're in the middle of the Goldman roll. Today was day 5 of the Goldman roll, so a lot of those got out of the May contracts, moved out to the deferred contracts, which that's what they do. Now, this is where the waters get muddy. I'm going to steal that line from Darin. The waters get muddy or it gets murky in here because we don't really have a good read on spreads unless we look out in the new crop. Because if we're looking at old crop, July versus September, we have an issue here. Is September old crop or new crop, and how's that going to be classified? Now, driving through northeast Nebraska and northwest Iowa, as I've done quite a bit of here the last couple of weeks traveling, there are corn piles all over, and there's even some soybean piles on the ground up here too. So, and this isn't just on the main roads. This is off the beaten path too, going around to visit clients and family and different feed yards and stuff like that. There's plenty of corn laying on the ground out here. So I have to agree with Darin. If we get that move upwards, we saw July close north of that 495 here today on a Friday. I think we could see $5 in the crosshairs. Now, if we were to close above $5, then that leaves us probably going to 510 to 520 up there as far as an upside technical target for the charts. But that's all barring another headline. What is going to happen with the headlines now? Some of the headlines that we talked to or that we listened to here were they were just pauses in these tariffs. So
Yep.
That doesn't mean they've gone away. And that's where the computer trading system, this is where the old pit system, folks would read into that and say, okay, they're still there. They're just paused, but the computers or the algorithms or AI read it as it's a pause. So, hey, it's game on, which this is probably an opportunity to take advantage of. And corn is seasonally doing what it does. So we put that low in back in August, the seasonals flipped, and we've been grinding higher since then. So this is a seasonal here. Historically, if you look back, new crop grains, corn in particular tends to rally for about 5 to 6 weeks in the spring. And this would be the second week of a new crop corn closing higher. So we may potentially be starting that 6-week rally in the spring, which would put us here towards the middle end of May here to cap out the spring rally, which could potentially be the case. Now, a lot of folks say you never make your high in May, but I've seen a couple times we've made our highs earlier than May, and we've seen the times where we've made our highs in May as well. So do be vigilant here on this new crop corn as well.
Okay, on corn, you brought up kind of where you saw things stocks wise. I want to read you though what USDA came out with their report on Thursday. They're showing a 3-year low with the stocks to use ratio at 9.6%. That's according to some of the analysts why we've seen this rally in corn. You don't agree with that number, is what I'm getting, Kyle.
Not necessarily, no. From what I've seen on the ground and looking at the local basis markets and things like that, a lot of the feed yards got what they need bought up. And of course, out here in feed yard country, that's where the demand is. And a lot of folks say, well, that's because the cattle ain't there. Well, we still got the cattle. We're just feeding them bigger. So it's still taking the same amount of corn. We just got less head in the yard. We're just feeding them bigger. And looking at the ethanol plants, we have seen plenty of corn laying on the ground there. A lot of piles that haven't been cracked yet as far as to pick those piles up off the ground. So every time I've gone by an ethanol plant or a grain elevator, I've seen a line of trucks. And so folks are moving that corn into town, yes. But the thing about the USDA is they can say this now in April, but they could come back in June and revise that number. And then everyone's like, well, darn old USDA, they adjusted that number and they really hitting the market because of that. Well, take it a day at a time here at the USDA reports because it's headline to headline right now.
All right, let's move on to soybeans. I'm looking at the chart over here on my left. At one point this week, we were, I guess, the range of the week. April 7th, we closed the May contract at 970. And meanwhile, here on a Friday afternoon, we're closing at 1042. What a range. And what's not making sense in my brain, Kyle, is all of this bullish sentiment. I guess we've seen the rally in soybeans when our top exporter, our export destination for soybeans in China, still has this massive, over 100% tariff that the president just says is not going to go away here as part of this pause. So what's the story in soybeans that's led to this rally?
That's a good question. Most of it's been money flow. A lot of it's been short covering. You've actually seen some open interest declines on the rally here, and that in itself in the old days really isn't technically bearish or a bullish, but folks are calling it bullish here. Now, I do think that soybeans, they like to trade in dollar ranges, and as you pointed out, we've had a 70-cent rally. So if we put another 25 to 30 cents on these beans, that may be enough short term here to say, okay, maybe beans have done enough here to the upside, and we could see a setback. Now, albeit, they're going to say, well, there's less acres of beans and things like that. But if that were the case and beans were so bullish, why were they building carry in that no of the Jan bean spread here this week? So I saw that spread slowly start to gain, which means that they're putting some carry out there, which is kind of a bearish signal here to the market as far as fundamentals.
Our recent high, I'm switching from grain to livestock, by the way. Our recent high in live cattle was back on April 2nd. And since then, we saw a little bit of a correction, but we have not gone back to the levels we had back on the 2nd, which was right when the tariffs were announced in the first place. Why do you think live and feeder cattle have not quite rallied back to the same level despite that pause in tariffs?
That's a good question. I think that high prices for a short term kind of cured high prices in here. We got to a place of euphoria here that first week of April where you were seeing, you were seeing just an astronomical number on these feeder cattle going through the sale barn. And I mean, you're talking 8 weights were, well into the threes. And I mean, you look at it and say, wow, somebody's really optimistic. And that was kind of the most bullish note you could get here as far as that feeder cattle market. And we had these non-commercial funds that were, record long. And that was an excuse maybe for them to take some money off the table, and they have taken some money off the table, and they banked some good profits here. And the end of March, that was the end of the first quarter. So they might be liquidating here a little bit more this quarter here in order to take some profit. Now we've seen a lot of open interest declines in both the feeders and the live cattle here over this past week, and that to me says that the funds were liquidating and getting out of some of these contracts here, and they did it in a big way. I mean, at one point in time, I think we were down over 40,000 open interest in the live cattle complex, and I think we were down close to 15, almost 20,000 in the feeder cattle complex. I'd have to go back and check those numbers, but that we were down substantially as far as open interest goes. So it does look to me like there was some money coming off the table.
All right, Kyle, we don't have near enough time to break down everything that's happened in this past week. So we've done our best stab at it so far, with just another 30 seconds left. I want to get your thoughts as we move to the next 5 days of the trading session being next week. When it comes to all the grain markets, corn, soybeans, wheat, or in the livestock, which one are you most optimistic? Despite all of the potential headlines that could happen, will we continue to see climb?
I'm optimistic because Friday we don't have any markets, so technically it's a 4-day.
There we go. We've got 4 days.
Yeah, exactly. So holiday weeks can be interesting, and so I am watching here to see if these live cattle and feeder cattle, if they can follow through on Monday, what kind of performance we put in on Tuesday when the funds start commitments to traders squaring up for that report that'll be released here towards the end of next week or the following Monday because of the federal holiday. And then also on the grain side of things here, how do we react in this July around this 1050 area, and how do these soybeans react here if we get another 20-30 cents on them? Also, it was a weekend. We did see some commercial sell pressure in the live cattle, the corn, and the soybeans. So it tells me there are some commercials taking protection going into the weekend. Maybe a little bit nervous of what kind of headlines could come out this weekend.
I got to pin you down though, Kyle. Which one are you most bullish on?
Which one am I most bullish on? Probably the gold market right now because it just keeps making new highs.
Not an option, but we'll take that as an answer. Kyle Bumsted has been our guest here on the Weekly Market Roundup. We get his thoughts as well as Darin Newsom's of all of the activity that took place over the past week. The Weekly Market Roundup is brought to you by the Nebraska Soybean Board, brought to you by Nebraska soybean farmers and their checkup. We'll see you back here next week.